Day traders swear by this specific time frame. It's the one they turn to when they want just the right amount of speed and clarity. And today, I'm going to show you exactly why this time frame is so popular and why it works so well. Hello everyone, I'm Lien with Vacay Traders. Later in this video, I'll also break down a simple but powerful strategy using this time frame that can help you tighten your entries, boost your win rate, and stay ahead of the noise. So make sure you watch the end of this video. And before we dive in, don't forget to subscribe to the channel and join our free trading community. The link is in the video description. So what's this time frame that experienced day traders rely on? It's the 5-minute chart. Now, I know this is not the flashiest choice, but the 5-minute chart hits the perfect sweet spot, and I'll tell you exactly why. It's fast enough to catch breakouts, quick pullbacks, and reversals, yet clear enough to cut through the noise you typically get on the 1-minute or the tick charts. You get speed without the chaos, and in many cases, confusion. The magic is in how it balances action with structure. It's not too fast, it's not too slow, just fast enough though to catch momentum in real time, just clean enough to spot those quality setups. On this chart, momentum comes alive. You can jump into a move, ride it for a few candles, and be out with a profit minutes later. This is what makes it so perfect for stacking those small wins. You're not sitting in the trade for hours. You're hunting for the opportunities and executing with precision. And it's the night and day compared to the 1-minute chart. The 1-minute chart is chaotic. Every tick feels like a signal, and every candle urges you to trade. But most of it is just noise. The 5-minute chart, on the other hand, smooths a lot of that out. It helps you see the market's rhythm, not just the random fluctuations. That clarity is especially valuable if you're a new trader, still trying to build confidence. 5-minute charts can be valuable in determining short-term support and resistance levels. On the 5-minute chart, levels often become decision zones where price reacts cleanly. A bounce off support with a strong bullish candle on a 5-minute chart, you've got a possible momentum entry. And here's a really good example in dollar yen. 150 is an important technical and psychological round number in dollar yen. You can see from this chart, dollar yen breaks below it, climbs back above, and prints a strong green candle where the arrow is pointing. And this is a sign of a strong short-term momentum trade that can last for 15 and 30 pips. In this euro-dollar chart, 110 is also a very important price level. Euro-dollar, you can see, breaks and closes the 5-minute candle at the high, which is very positive. And this becomes a beautiful breakout trade that runs for more than 100 pips. Now, if you spot a breakout above resistance with rising volume, that's even better. It's a green light for an even stronger trade, particularly in things like gold and indices. So as you can see, support and resistance levels aren't just random lines. They're dynamic zones that can help guide your trades. Candlestick patterns on 5-minute charts can also be very valuable. I love to look for dojis, hammers, engulfing patterns. They pop up all the time in the 5-minute chart, but you can't use them in a vacuum. But when you combine them with context, they can be very powerful. For example, a doji at resistance, a possible reversal. A hammer off a moving average, that could be a high probability entry, like this one in gold. On this 5-minute gold chart, we see a hammer pattern, which is a sign of a reversal. So we check the higher time frames, and you can see on this 1-hour gold chart that the hammer is forming right at the 200 simple moving average, giving us a strong reason to believe that gold will rebound off of the 200 SMA. And that's exactly what it does for a very nice 50-point move. As you can see, these patterns on the 5-minute chart can give you insight that you can act on when you combine it with other indicators without waiting all day. But here's the most valuable part that I hope you take away from this, which is top-down analysis. Many traders will look at a higher time frame, like the 1-hour, 4-hour, or daily chart, to map out the key zones and overall trade direction. We saw that on the 1-hour chart in gold with the bounce off the SMA. Then they'll zoom into the 5-minute chart like we just did to identify entries and exits. The hammer pattern in gold confirmed a likely reversal. And I would say this is single-handedly one of the most useful aspects of the 5-minute chart, which is to use it to time entries and exits. So what type of strategies can traders use on the 5-minute chart? There's scalping when you're in and out of fast trades, often in under 5 minutes. There's breakouts entering as price blast through a key level, which I love personally. And there's trend following, riding clean directional moves after breakouts, which I also like, and reversals, catching momentum flips at important zones. But it's important to mention, though, that the 5-minute chart can still trigger emotional trades if you don't have a trading plan. Fast setups require fast thinking, but that does not mean reckless trading. Pick a strategy that you feel comfortable with, whether it's trend following, breakouts, or reversals. Adhere to the stop loss and maintain the discipline to wait for the right setups. So now let's take a look at that simple 5-minute strategy that I promised to share. This strategy is a New York session breakout strategy that works very well in the Eurodollar. So let's take a look at the charts. Okay, so we're looking at my 5-minute chart. What this strategy does is it looks for the range that the Eurodollar may have during the London session and basically leverages on the breakout in the range. A very easy way to do that is to use some of the built-in indicators that TradingView offers. So click on indicators, and I want you to type in trading sessions. There it goes. And under technicals, trading sessions. Now there's a lot of colors, bars, lines, and things like that. Don't worry. Click on this little gear icon, upper right-hand corner, left-hand corner, it says settings. Click on that. And we don't need to see Tokyo. We don't need to see New York. We only want to see London. And I'm in New York, so I'm going to change this to the America-New York time frame. So I'm going to copy this America-New York session here. I'm going to paste it over here, make sure that's the right time zone. So I'm going to be looking for the range between 1 a.m. New York time and, let's get this up here, 6:30 a.m. New York time. So we've got the sessions here. And then I'm going to hit OK. So as you can see here, what's really nice is that TradingView outlines to me the trading range of the session. So basically what we want to see is in the first couple hours of trading, we want to see either the high or the low of this London session trading range broken. So on this day, it's not broken. So we're going to scan back to the day before. Now, this is a 5-minute chart. So there's a lot of information encapsulated in this 5-minute chart. So this day here, no breakouts off of this zone, no trade, no big deal. But I think we have a trade coming up over here. Let's see. So here we go. Right here, we have the London session. So we've got the high outlined here. We've got the low outlined here. And I am going to draw a horizontal line here. And you can see at this point here at 8:30 a.m. New York time, which seems like a really long time from the zone, we finally get a break to the upside in Eurodollar. Now you have two choices. You can either just trade the break of the zone, but in this way, it's not a very strong break, so I wouldn't say it's the most convincing. What I would instead is I would wait for the break of the zone, wait for it to drop below, and then come back above it. So it's kind of like a break, retest, break. So here we have the break of the high of the London session. Then over here, we have the drop below back into the London session. And then finally, over here, we get the real breakout. And when Eurodollar really breaks out, this becomes a beautiful move that lasts, I would say about 60 pips. So let's take a look at another example here. Let me remove these indicators. So here's another example. Sometimes the trades can be big, sometimes the trade are not so big. So in this case, we have here a break below. And so you can either sell right on the break of this bottom of this London session zone, or what you could do is you can wait for a move back, a break below, a move back above, and then a failure to hold that level and sell this candle here. So here you would have sold 107.86. It wasn't a big move. It was only a 10-pip move. We really didn't get much out of that. But, when we go over here, you will see we get a pretty nice move here. Here, we're breaking the bottom of this zone. So break the bottom of the zone. It does go back above. And then we wait for the next break over here. This is a line from before. I'm going to delete this. And you can see when we break this and it closes 108.12, it does become a nice 30 pip move lower. And usually with these 5-minute trades, you want to capture between 15 and 30 pips. You really can't be greedy with a similar type of stop. So that turns out to be a nice trade. And let's see if we have another one here. Here, this is the top of the zone, okay? This one, it breaks out right around 9:30 New York time, 9 o'clock New York time. And it does test does retrace. It doesn't drop below the high, but it does test it and it bounces off it. So at this point, maybe you would have taken the trade, maybe you wouldn't have, but you can see that the break, retest, move higher does basically become a very, very nice move higher in your Eurodollar. And let's look at one more example here. Over here, once again, we see, and this is more like the one that we were looking at in the beginning, where we get a break of the top of the London session zone, and then we get a move back below it right here, and then we get a move back above it right there. And then that candle, let's just delete that. We go long Eurodollar at 107.84, and it becomes like, it's like a 90, it becomes a 10 pip, 15 pip trade, so it's not so bad. It does go retrace a bit though. If you held on to it, it did retrace a bit. It never stopped us out because, it only went down to 107.76, only 10 pips, and eventually went all the way to 108.20. It feels like a long time, but actually the target is hit before noontime in New York. So it's only a couple hours. And so this trade would have been a really nice trade as well. Well, that's how it works, my friends. Clean, simple, and effective. You can use this principle to trade other instruments as well, but you may want to adjust the timing. So to wrap it up, 5-minute charts give you speed, structure, and more control over your entries and exits. It's the time frame where you're in the action without being overwhelmed. Whether you're scalping, following trends, or fading moves at key levels, the 5-minute chart appeals to many, and I would even say most day traders. If you enjoyed this video, please hit the subscribe button and don't forget to join our free trading community. The link is in the description. You'll get direct access to our free trading courses, market updates, live discussions, ask me questions, along with more strategy breakdowns like this. And now I want to hear from you. What's your favorite chart time frame to trade? Drop it in the comments below. And if you want to learn more about 5-minute chart trading, like one of my momentum strategies, type in MOMO, M-O-M-O, in the comments, and I'll make sure I cover that. I'll see you all next time.